for anybody, quantify your rules, quantify and understand your psychology, and work around it.
Yeah.
Find ways to trick yourself. Like a lot of times, I remember I would, if I had my losing streak, I'll just turn off my system and I'll just walk away. That's
Yeah.
something at work, because if I was behind my system, I will make a trade. These are the
Yeah.
things that
Traders, welcome back to Simply Forex and welcome back to the Sit on Your Hands podcast, the place where experts share their insights, knowledge, experiences, and strategies with you. And if you stay to the end of the vid, guys, we're going to take a really interesting look at what the risk department does within an investment company, right? So it's going to be super interesting, guys. And let me introduce our guest. So we are joined today by Ankit. He is head of risk at Maverick Trading for the Forex division. So welcome, Ankit. How are you?
Oh, thank you. Thanks, Tom. Well, very good. How about you?
Yeah, all good, thanks. Yeah, we're just saying we've just been enjoying the long Easter weekend.
Indeed, indeed. And like I was saying, I mean, it's always nice to have a little break from the markets and just give yourself a reset. And I remember, like,
Yes.
when I was being like one of those young traders, and I used to hate those weekends. I'm like, I can't wait for the markets to be back open again. And now I'm like,
Yeah.
I like to take that time off. And that reset is indeed very important, because we get so caught up with our emotions and psychology, and you could be in a winning streak, you could be on a losing streak, but just giving yourself a reset and get back into it is always the best thing to do.
Yeah, totally. Couldn't agree more, Ankit. You do need a break from looking at candlesticks. Otherwise,
Oh,
you will go
yes.
grey and mad. See, I've already gone grey, just not mad yet.
I mean, I have gray hair, and I'm like, where's that coming from? But yeah,
Uh,
it's the markets.
yeah, happens to the best of us. And then
Indeed.
Ankit, we're really interested. So obviously, a few weeks ago, we interviewed Rob, and he was the founder of Maverick Trading, and we thought it'd be a really good idea to speak to, yourself, because you basically deal with the risk of
Right.
Maverick Trading. So we just wanted, to paint a picture of
Hmm.
what the risk department looks like, who's it made up of, where
Right.
is it, and what's your kind of interaction with the traders, just sort of set a picture for the viewers.
Right. No, absolutely. At Mavic Currencies, we are one of the prop trading firms, and we have traders that come on, learn how to trade, like go through the whole program, and at the end, they go through transition into a capital sharing program where they have access to firm's capital, and that's where it becomes more 101. As a
Mm-hmm.
person behind the scenes, I get to see everybody how's they're trading, reallocate capital, and you really get to know a trader. Even though by just someone trading, you get to know exactly where they are in the psychology. And my job is just to make sure that traders are managing risk correctly. Everybody start with the trading plan, but it's kind of fascinating that how when the psychology kind of comes in play, that how easily people can deviate from that trading plan. And as they start from a lower level and they start to get more and more access to capital, I mean, that's really where not only we make sure that traders are not taking excessive risk, but that's where a lot of the ongoing coaching comes in as well, where I constantly reach out and I'm like, hey, why are you doing this?
Yeah,
Or why the markets are doing this, and a lot of times it kind of makes the trader question and think about it. So yeah, as a I come in as a person that provides a lot of ongoing coaching just to make sure that people are navigating these markets
sure.
correctly, having that experience. And somebody coming in and not having that experience makes a big deal when it comes to navigating these markets, as we go from a quiet markets to what we experienced just like 3 weeks ago, where markets were just going nuts across the board and
Yes.
volatility was good. And the biggest thing at that time was like the percentage moves. We have seen some percentage move in the markets that we haven't seen for years.
Yeah, yeah.
So that was that's where I come in, just to make sure that traders are not over leveraging, over risking, and most
Sure.
importantly, not deviating from their plan and getting stuck in a position, which is very common.
Yeah,
When people are dealing with live money, is that sometimes our
yeah.
emotion gets the best of us. So We want
Yeah,
to make sure
sure.
that we deviate from that.
Yeah, sure. I mean, and a lot of this volatility, we've got Trump to thank for. So,
Oh,
yeah. And
it's
then,
it's a different market altogether. What people were used to in
yeah,
the last few years.
it's crazy how one man can make them, just absolutely manipulate the markets. He can make them do whatever, whatever he likes. It's crazy at the moment. But let's,
Indeed. I mean, I traded, the thing is that a lot of people who have been trading for a long time, we saw that back in 2018, 2019, in the
mm,
first term. But I
mm,
think this is just a 2.0, a next level that, even
yeah,
that kind of puts it to bed, where now it's even more escalation and more global
yes.
than what it was back in the day.
Yeah, sure. And then
Yeah.
just thinking about, going back to risk and dealing with different traders. So do you sit on the trading floor, or the way of the world these days, you're dealing with traders a lot one-on-one, like over a video call, or are you sitting on a trading floor? How does that interaction with traders work within Maverick Trading?
Yeah, absolutely. I mean, like I said, in behind the scene, I can see exactly what traders are doing, what positions they're taking, and all sorts of stuff. So now at that point, if there is things that are like, hey, this is too much of a risk, or
Mm,
like market's environment is different, maybe on the wrong side of the direction. But that's really where I just send a quick email, get in touch with the trader, kind of make sure they understand the risk, make sure
okay.
they're kind of like not getting carried away with the markets, and they have a rationale behind their decision. Like that's where
Mm,
we reach out. So there's some people who are on, they're doing correctly, so we don't need to worry about them. But
yeah.
usually it kind of goes on to the point where when somebody needs some help, like that's where I will then assess and see, okay, well, this
Yeah.
person is clearly not doing it right here, and then I do reach out and make sure that they don't do a lot of damage here. So that's where I come
Yeah,
in and
and
watch the activity.
yeah, sure. And what are you looking for? So, a double barrel question. So, what are you
Uh-huh.
looking for in terms of on your screen, Ankit? Are you getting like alarms popping up if certain percentages are being hit on accounts? And the second part of that question is what kind of questions do you ask them to get them back on track? Because I always say to
Hmm.
viewers, like, just stick to your plan, stick to your money and risk
Right.
management, make sure your psychology's bang on. But it's one thing
Right.
saying it, it's another thing keeping people on that path, right? So yeah, what are the real alarms that you the time you need to intervene, and how do you intervene? What questions do you ask?
Yeah, no, absolutely. So, I mean, everybody that goes into live trading, they send me their trading plan. So
Okay.
we have a final trading plan. I know exactly how they'll be trading. So you have a better idea of what that personality is, exactly what their parameters are.
Mm,
The first thing, I always take a look at is, of course, taking the position sizes.
mm,
Sometime you look at an extreme bigger position size and like, okay, well, this is odd. This is not what you
mm,
had set
mm,
out in your plan. And a lot of times, what I kind of set out for is, are you using the right strategy in that market? A lot of
mm,
times, like for example, like 3 weeks ago, you had markets that were going wild, and then somebody going in with a much tighter stop, and right away
mm,
it's like, hey, there's a likelihood that you're going to get stopped out on that position, or
mm.
you're taking too many positions in a day or in a week. So those are the
Yeah.
things that I kind of look out for. And mostly it
Okay.
comes down to is their daily drawdown limits, not taking an excessive risk on a position
Mm, mm,
where,
mm.
you know, I always like to talk about a worst case scenario. Are you okay
Mm,
with that worst case scenario? And I can
mm.
see where somebody's stop is, where their overall risk is like, this is not an ideal risk to take in this market. So those are the things I always like to talk about. And when I bring it up to a trader, like first question is always, is this part of your plan?
Yeah.
Is this a rationale thought or is this
mm,
an emotional decision? So we really
yeah,
need to separate that rationale with that emotional decision,
yeah.
and that's where we come in and provide that guidance and coaching.
Yeah, and it just gets them to stop, right? It just gets them to pause, take a minute, and not let their emotions run away if they are in a tricky situation. Yeah, so yeah, very
Yeah, I mean, a lot
valuable.
of times, yeah, like like sometimes, like I can't tell you how many times I get a thank you after and say, hey, thank you for stepping in, or even halting my trading because
Yeah.
I was getting carried away, and I wish when I first started trading, I had all this structure because there are
Mm.
times where I wish there was somebody just to kind of get me out or help stop me from making a trade
Yes.
because I was on a tilt, and that's really where the emotional aspect comes, where when you get on a tilt, it's more like all or nothing. And
Yeah.
it gets the best of us. And nobody is better than everybody. Like everybody, it gets the best of us. So that's where you have
Yeah.
to really be aware of your psychology so you never fall in the trap.
Yeah, it just stops very destructive behavior, right? You just need to, yeah, I
Yes.
wish I had someone to come in and just, stop me many a time, yeah, when I was learning
Yeah,
how to trade. And then,
absolutely.
we'll talk more about psychology. I just want to understand some numbers first of all, Ankit.
Hmm.
So, you know, what are people first of all, what are they risking in terms of percentage of accounts? Like, the general benchmark we see,
Right,
many traders are always like 1%. But do you have
right.
traders trading less than that? Do you have traders risking more than 5%? What's the typical risk percentage, and what are the sort of
Right.
extremes of that?
I mean, the general idea is that you want to be sticking between 1 to 2%. So
Mm,
1% is more being conservative, where
mm,
2% would be more, on an average risk per position. A
mm,
lot of times, we talk about, what's the overall percentage at risk in the portfolio. A lot of
mm.
times, is it 2% per position, or what's the max I can have along, in my portfolio by
Right.
being in multiple positions at a time.
Yeah.
So yeah, so that's the benchmark. That's the number that won't get you in trouble. But yeah, if you get in
Mm,
and let's say you could right off the bat, you take two positions with 2% risk. Now you're at 4%
mm.
of risk,
Yeah.
and that's a lot of times. I always say, hey, scale into positions instead of jumping right in
Mm,
and and taking all that risk at once. You can increase your exposure by not taking that all that risk at once. So
yeah.
those are the things that, again, depending on personality on traders, some are more aggressive, some are less. But yeah, that's the
Mm.
number that we kind of strive for. It's around 2%.
Yeah, sure. And I'm intrigued about some of these conversations you have with traders. Do you ever have traders that get upset by you telling them to slow down or take less risk, or is it always positively received? Because I can, like, if a trader is full tilt and he's not in
Right.
control of his emotions, he's like, "Oh, leave me to it." We know that's destructive, but or is
Right.
it always well received when you interject? Thank you.
Like, yeah, when somebody is caught up in a position, of course, emotions are high. If I take them right out of a position, somebody might get upset because,
Mm,
let's say if that position, like I get them out and the position goes back the same way, suddenly
mm.
I cost them money, right? So usually
Yes.
that's why I always try a trader to make that decision for themselves. I'm there
Okay.
to make sure they are understanding and they understand the risk,
Hmm.
but
Yeah.
majority of time I must say that it's met with positivity because a
Yeah.
lot of times, and I'm sure you and I can kind of relate to it. Sometimes we know when
Mm.
what we're doing is not right,
Yes.
but
Yeah.
we are so crippled by our emotions that
Mm.
by knowing it, we are not able to action it. So
Yeah.
even I'm going to use a recent example in the last 3 weeks, people were more appreciative because suddenly, you're dealing with things that are not normal. And yeah, at
Mm.
that time, people like when they are prompted and then stopped
Mm.
because sometimes
Yeah.
they're like, we can't help ourselves, but sometimes having an extra person watching our back actually goes a
Mm.
long way. And even
Yeah.
myself, I will appreciate that more than being taking as a
It-
negative.
yeah. Even if there was a bit of friction during that call, once you've settled
Right.
down and appreciated what you've actually done for that trader. Yeah, exactly.
Right. And in hindsight, it's always
Uh,
I mean, in hindsight, it's always the best decision because you look back when the dust settles, you're like, oh wow, I'm so glad I was able to
yeah,
get out and prevent that damage.
yeah, still got the shirt on my back kind of thing. Yeah. and then
Yeah.
interestingly, so well, and obviously, right, you said traders, give you their strategies, right? I'm sure some of them are,
Right.
very detailed, or they have to be very detailed for you to
They have to be
understand them.
detailed. Yes.
Yeah.
Yeah.
And when you receive those trading plans, do you ever look at them and think, "Oh, I don't like that one," or "Oh, that one makes sense to me," or "I'm not sure about that one." Do you ever feel like that when you receive a trading plan?
I mean, a lot of times, I always say this one thing that I just, I always talk about is that, it's all about doing the right thing at the right time. So there's so many strategies out there that, and
Mm,
one strategy can be good in one environment, and then the one strategy could be effective in another environment. So at the end of the day, the strategies are effective. It's all about,
mm,
okay, are you applying that strategy in the right environment? And one of the
mm,
things that I always talk about is having a basket of strategies, not just one strategy, because
mm.
every market environment is going to require certain strategy that works the best.
Yeah,
If you
sure.
go swinging the bat, baseball analogy, you go swinging the bat and just want to go with the home run every time. Well, that doesn't work. You
No.
might hit it when you get the perfect condition, but then you're gonna spend time on
Mm,
the being frustrated because you can't get a home run, and that's just
mm,
how trading is. Sometimes you have
mm,
markets that are low volatility, easy to trade, and then there'll be times where it's higher volatility. So
mm.
your time frames will change. Your holding period will change. There's so
Yeah,
many factors that come in. So I always like to go and say, well, have more strategy in place, and that's more specific to those market conditions.
yeah,
And in hindsight, if you look at the last 3 weeks, the way I was trading 3 weeks ago and the way I traded last week and even this week, it's way
yeah,
different because
yeah.
volatility is down quite a bit, and that allows me to
Mhm,
work with different time frames, and it allows me to hold
mhm.
that trade for a little bit longer and not worried about there's too much of that market volatility.
Yeah, sure. Yeah. And you mentioned it earlier on when, Trump was opening in his mouth and we got these big swings in the market, you can't have a tight stop loss, right? So something like that, you may need to stretch that stop loss out a bit and adapt to markets. Yeah, definitely.
Or even understand that risk that it could go
Yeah.
either way wildly.
Yeah.
And I
Yeah.
always say that if you don't like that, don't be in a position.
Yeah.
It's always like we always want to make sure that if we don't like the outcome of that, uh, then don't be part of it. And yeah, and whenever there's a news events, FOMC decision, there's so many events that comes along where we
Mm,
have to make the decision like, am I
yeah.
okay to be part of this, or am I okay to let the dust settle and get back
Yeah.
into it when it's more manageable?
Yeah, sure. I'm more of a let the dust settle kind of trader and then get back into it afterwards.
I
And
mean,
then,
likewise, it's when you first start trading, you all want to tackle everything. As you
yes,
get more
yeah, yeah,
experience, and you decide and you pick and choose, and I think that's the evolution of a trader, where
yeah,
instead of being a part of everything, I'm like, I don't need to be part of everything. I just need to be there at the right place at the right time. That's all I want.
yeah, yeah. And really interesting talking about the evolution of a trader. I mean, is there some typical trader graph that we could draw? Like their psychology goes from this to this, their temperament, their execution. If you think of a trader and everything they do, in terms of strategy, money and risk management, and psychology,
Hmm.
what's some of the typical things that new traders do, and then as you see them mature, what do they do better? How does that evolution look with a trader?
Oh, yeah, I mean, that's a great question. And I must say that, like, at the beginning, I mean, if I have to describe that in a chart, that's a big volatile chart. That's the
Yeah.
evolution that everybody start with because, in the first year or two, you can experience the highs and the lows. You experience
Mm,
how good it could be, you can experience how bad it could be. So your waves are a lot bigger. And as you
Mm-hmm.
evolution goes higher, you get more experience. You start to make those waves a little bit shorter, because you don't
Yeah.
want to be going on the top of the swing here, and then now you're
Mm-hmm.
like at the bottom of that channel. So
Yeah.
that's how it kind of goes. And
Mm-hmm.
it is something that I some traders struggle at first and then it gets better, and
Mm-hmm.
some traders even
Yeah.
struggle later.
Yeah.
Especially as your account size grows and you have
Yeah.
access to more capital, and suddenly
Mm-hmm.
I see that shift where somebody's doing it perfectly, and suddenly because I gave them extra capital,
Mm.
now it becomes more psychological. Now they're looking at dollar
Yeah.
amounts, and that's
Yeah.
affecting the psychology quite a bit. So I think as we look at the evolution, every stage has its own pros and cons, but it's a volatile stage
Mm-hmm.
at the beginning, and it just gets better because now you understand both sides of it, and you can
Yeah.
only get to that point by going through that crazy cycle. And
Yeah.
then you understand, and like I said, now you're like, I don't need to part of that. I need to
Eh,
be in this game longer than try
mhm.
to be in it all the time.
Yes. Yeah. Yeah. You can imagine the chart being like this at the start and then slowly just
Yeah,
the trader ticks along. And that's when they start to experience, growth in their accounts and just themselves as a trader. Yeah, sure. Um,
yeah.
and what's thinking of the psychology of a trader? Are there some traders that you've just had to say, look, you do not have the psychology to be a trader? Have you ever had to say that to someone, or is it more of a case of, look, we'll train you to be better, or have you just had to say, look, it's not going to work? To be quite honest.
No, I mean, I never get to say that because I believe in it that, we are just few adjustments away from making it work.
Mm-hmm.
You know, this is the business. It's not as easy. There's a lot
Mm-hmm.
of,
Yes.
learning the markets is half of the battle, and
Mm-hmm.
learning about yourself is the other half of the battle.
Mm.
And as you see both sides of it, and then you just, like I always say, your personality doesn't change, but
Mm-hmm.
what you can change is your triggers,
Yeah.
your weaknesses, and that's why
Mm-hmm.
I'm a big believer that nobody's perfect and
Yeah.
everybody's going to have their flaws,
Yeah.
and it just doesn't disappear. I just
No,
know
of
how to
course.
manage them better. Like,
Yeah.
let's say if I'm on a losing streak, I will stop trading right away. I
Mm.
don't need to get, I need that break. I didn't
Mm-hmm.
know that when I first started trading, and I would just,
No.
because I'm stubborn a little bit, you want to just work harder, or
Yeah.
even make more trades to get back into it. And now it's like I
Mm-hmm.
know the triggers. When I'm on a winning streak and I'm have a very good return, okay,
Mm-hmm.
time to take some cash out of the account.
Yeah.
Put that on the side. Like, so all these things that you do just to trick yourself,
Mm.
just to make
Yeah.
sure that you don't fall in those traps. So
Yeah.
I don't believe that. It's not like it's all about how persistent you are.
Mm.
And the longer you do this, your chances to survive and get better increases
Yeah.
dramatically.
Yeah.
So I never get to say that you can do this. I'm like, hey, this is just few adjustments away to making it work, and it's your job to do that.
Yeah.
Um, and you be in the right mindset to do it. So the only time I always say, hey, you got to stop is when somebody's in not a great situation.
Mm.
Like that's it's the same thing. It's the psychology part of it.
Mm.
If you're not in a good situation, it's best to kind of take a break,
Yeah.
because this game you got to be master at your psychology.
Yes, and just by you talking, Ankit, it's you get these figures thrown about like trading is 90% psychological, 10% strategy. Would you agree? I mean, is what a lot of what you do, Ankit? Is it a case of just managing people's emotions, or is there quite a bit of changing strategy and making people aware of when strategies maybe need a little tweak here and there?
I think it's like a half and half. Like, psychology plays a big role, but like
Mm,
I said, one of the biggest flaw that I see traders is that you're just set with one strategy, and I'm like,
mm,
if you just take a look at an entire year of trading, you go
mm,
through volatile, you go through non-volatile, you go through
mm,
directional with volatility, and you go with non-direction with, like, so we go through all sorts of price action throughout the year. Now, if you want to be successful throughout the year, but guess what? You have to tackle all those environments differently.
yeah,
So that's the biggest one. For
yeah,
example, trending markets. there's some strategies, reversion to the mean strategy, or
mm,
I want to trade on the daily chart. Well, there are times where I can't find something on a daily chart that's going to run for next 3 weeks. But guess what? I
mm,
can find something that would be, find the momentum that could run for next 3 4 days.
yeah.
So understanding that is very important. And this week, this
Mm,
is a good
mm,
example where, direction wasn't there, but there was a lot of volatility. So
yeah.
anybody that just jumping on a daily chart wants to, trade a certain way, it just suddenly it's just not working out because volatility is eating you out, or things
Mm,
are not even developing. 3 days it goes one way and just goes the other way. So
yeah.
that's the one thing that I always say is, strategy has a lot to do with it, and you have to
Mm,
make sure that you're prepared for different market scenarios. That's the
yeah.
best way to approach the markets.
Yeah, definitely. Yeah, a lot of people probably aren't aware of the market they're in. They feel the volatility, but sort of really understanding that and how you can trade within that volatility is, yeah, what the market's doing. Yeah, 100%.
Right.
And just some sort of, well, not fun figures. These wouldn't be fun figures
Hmm.
for the traders. But what's the largest you've seen somebody offside, and you're thinking, oh my god, and what's the some of the biggest profitable trades you've seen? Because I imagine you've seen it all, Ankit. You get all the
Yeah.
data coming into you,
So the
and we
largest,
want
like
names.
like
No,
the
I'm only
position
joking.
size. Are you looking at like the largest
Yeah,
positions?
yeah, well, yeah. Just the largest position someone's been offside
I
or in
mean,
profit.
I mean, the thing is that it's all comes down to the percentage and the count size you're trading, right? So
Yeah, yeah. It's
somebody
not
trading,
about a dollar amount. I
yeah.
totally
So like that
agree.
number is gonna vary so much. Whereas if somebody's trading a half a million account, your position size is gonna be at least 10, 20 lots, depending on.
Mm,
So I get to see position size all across.
yeah,
People are trading between 10 to 15 lots to go down to as low as like a one lot or half a lot. So
yeah.
that's really down to the count you're trading. So yeah, the numbers get bigger as you're trading more and more capital. Now that's why I said like that's where it really affects people's psychology, because now
Mm,
if one trade is going to make you 20,
uh,
$30,000, now
yeah,
that you're like, whoa, this is like, somebody makes in a year, or
yeah, yeah,
somebody makes in a few months. Like that's where it gets a bit tricky now when you dealing with those numbers. So
yeah.
the spectrum is pretty wide.
Mm.
I see things way in six figures down to somebody making a few thousands, in a month, and that's just a spectrum that we deal with across the board.
Yeah, sure. And do you have to give more attention to the larger accounts? Obviously, it's trading funded money.
Hmm.
Does that play into it? Obviously, everyone gets the
Right.
risk management, but do you have to prioritize those larger accounts?
So, I mean, the thing is that anybody that gets allocated more capital, at first, I'm always watching because, like I said, I've seen when people go up on that higher capital scale,
Mm-mm.
suddenly something happens in psychology where it's like,
Yeah.
hey, now I'm gonna make six figures. Like you
Mm.
start to lose percentage figures, and now you start focusing on the dollar amount.
Yes.
But usually the way we have set up is where people slowly graduate to those higher levels,
Mm.
and the only way you get to those higher levels is by showing consistency, and by showing by showing some discipline. So as people are going into those higher levels, I have less to worry about, because I'm not
Right. Okay.
worried that they're going to go in and they're going to just risk all their account in
Yeah.
one trade. And I think how, and I think I'm very happy the way we set up, because you want to reward traders as they get more experience rather
Mm.
than giving them a lot of capital right off the bat. And I think the
Yes.
success rate will drop dramatically, because now you just like you just learn how to drive, and you're just given a Ferrari. Like
Yeah. Yeah.
you're not be able to manage
Yeah.
that. You got to work your way up to a Ferrari, and that's
Yeah.
how that works. But
Yeah.
people
I
are more
imagine.
responsible. People are more responsible as they go higher capital levels.
Yeah, yeah, I found that. Yeah, and incremental, like you say, you can't go from trading, $50 offside to $5,000, right?
Right.
You've got to, get some sort of system in place for that. Yeah,
Right.
exactly. All right, so really
So,
interesting, Ankit. And guys, please don't forget to check out the links below to Maverick Trading. As Ankit said, they are a prop firm who are offering funded accounts, so go check that out right now. Also, don't forget to subscribe to the channel, smash the notification button, and please smash the like button, guys. Also, don't forget to join our trading community. Come join our free Discord channel. We have lovely people in there. And Ankit, yeah, just to sort of, so we sort of understand your role now and what you
mhm.
do as a risk manager, and some really great insight there. Um, but you trade yourself as well. Like, how long have you been trading? Is it, do you do it full time as well as the risk management, or is it something you did in the past and less so now?
No, it's a great question. I mean, so I've been trading since 2008.
Okay.
So at Maverick Trading and Maverick Currencies, I started off as a trader, and I've kind of worked my way up, and I've been trading full time pretty much since
Mm,
2010. So it's been a long time, and
mm,
and I always say, like, anybody that's you're dealing with Maverick, we all are traders.
yeah.
um, and we just with risk management and all, like, I'm all dived into the markets, and managing your portfolio, managing others, managing the firm's portfolio, managing everything. So it kind of goes all in hand. But yeah, I
Mm,
am trading alongside of everybody else, and I
mm,
think that's what makes it great, because you are you know what's going on, and you're
mm,
kind of giving advice of what you would do, because you're
yeah.
kind in the markets, you're doing the exact same thing. And that's
Mm,
where I can relate to traders. I can relate to
mm,
everybody,
yeah.
because I've been through the same path, and I know the pros, and I know the psychology, and that's just the way it goes. So
Yeah.
I started off just as anybody else. You learn, and over time, I became an instructor. I still teach. I still do videos, classes. We do our recaps, market roundups, all sorts of things. So I still teach, and I
Mm.
also take care of the risk management there.
Okay, okay. And how would you describe? I know you said you're encourage traders to have a basket of strategies. How would
Uh-huh.
you describe your strategy, Ankit, or your basket of strategies? When we think of these basket of strategies,
Right.
like is one a trend following, one is for ranging markets, one is
Right.
for low volatility markets. What does a basket of strategies look like?
I mean, so the basket strategies. I mean, I trade all sorts of markets. So other than the currencies, I trade the bond market, the futures market, the options market. So my basket strategy is kind of spread across the board. But when it comes to the strategy, the first question you start with is, okay, what's the holding period? And I think this is where a lot of people get it wrong. Is that there's some trades that I can get in for a couple of days or 3 days. It's a
Mm,
nice momentum trade. And then there's some
mm,
trades where, yeah, I can ride that trend for next couple of
mm,
weeks, and I don't need to worry about it, or for
yeah.
next month, as you dive into options trading, and now
Mm,
you're looking at strategies 4 to 6 weeks out. So
yeah.
so I think my strategy or basket strategy all starts with that time frame of holding period, and
Okay.
what's the best thing to do in those markets.
Mm,
And like last year's a good example. We had first quarter was one of the easiest quarter. It was just up and up and up, low volatility. That was it.
mhm,
And then here we are
mhm,
with this year. First quarter was very different. So you
yeah.
definitely have to pivot from
Mhm,
going to holding period. So if the volatility is
mm,
high, then my holding period is going to be more focused on momentum,
yeah.
and velocity, as we say at Maverick. We look at trend scores, and we look at
Mm,
velocity scores. So a lot of
yeah.
times I look at trends, and I want to be part of those trends. And then there are
Mhm,
times where you want to be part of the velocity, which is
mm,
taking advantage of that and not being married to any short-term or long-term outlook. And a lot of times
mm,
we get married to a certain outlook.
yeah.
And I try to be more open and keep the outlook fresh, so I can kind of
Yeah.
maneuver either way. So that's just how I kind of operate in my trading.
Yeah. And I couldn't agree more with that. You've never seen such a fluid thing than a market, right? And
Right.
these, it means you have to pivot sometimes and amend your trading style and intervene with trades, manage trades, right? It's so fluid.
I Yeah,
Um,
one of the things I always say is, with markets, this is the only business where I can do the exact same thing today and tomorrow and get totally different results.
Yeah,
So,
yeah,
and a
very
lot of
true.
times you start to think like, is it me? Like a lot of times it's like I did the exact same thing yesterday and I do the exact same thing today. What
Yeah,
changed? And
yes,
it's the market is the variable. So I
yeah,
like to focus on that variable because that variable is changing. So what I do in this decision making in this environment will be, if I do this something else, like I need to make sure it's more specific to those conditions because one thing is going to work in one condition and it's not going to work in the other condition. So you
yeah.
got to keep track of that market variable for your decision.
Yeah, sure, sure. And yeah, just a couple more questions, Ankit. But yeah, really enjoyed understanding, what the risk department does at
Mhm.
Maverick Trading and getting a bit more insight from that side of things. People,
Right,
a lot of our viewers are retail traders. They're not on, trading floors, or they don't have a
right,
risk manager to help, right? So it's been really interesting for people to understand what risk managers can do for you, right? And
absolutely.
a very welcome interjection, I'm sure, now and again.
Hmm.
Now, probably a bit of an unfair question, Ankit, but because you've seen so much data, so many strategies,
Right.
so many traders. So what makes up the perfect trader
Hmm.
and strategy?
No, that's a great question. I mean, so what makes a perfect trader? And I'll relate it to as you start trading, your scope is very small. You're looking at things from a day to day basis or a week to week. As you get more experience, your time horizons get a little bit bigger. So over time, what I find, and the most successful traders are the traders that are not trading every single day. You trade, like I said, the markets that you probably like it better. A lot of times it's
Mhm.
say if you don't like the price action, don't trade it.
Yeah,
So yeah, so the best one is where you know what you're doing. And if you see that market condition, this is where I need to be active. And then there are times where like, hey, I don't like the way things are moving. I'm a trend trader and I'm not seeing a lot of trends. So I got to sit out. So a lot of times I see is the best traders are when you're looking at longer term horizon, not being active every single day, every single week. But you go
yeah,
with the monthly goal and the quarterly goal and that time horizon. The bigger the time horizon is, the better it is because then you feel less pressure on making. I gotta do this today. I gotta do this next week. You
yeah,
gotta be more relaxed and have a bit of a longer term goals. So
yeah,
yeah, so I think the best trading plan is that are specific, and when you don't see that market condition, you don't trade
mm,
it.
sure.
That's the hardest part of trading is when you're behind the systems, you're behind everything and not doing anything. You feel
Yeah.
like I'm not being productive, but the best plan I find or the traders are they're trading certain conditions and they're out for most of the time.
Yeah. And it's so counterintuitive trading, right? Your whole life you've been told the more you do, the more productive you will be. But
Mhm.
trading's almost like you have to break that. It's
It's
like the
almost the
less,
opposite.
yeah, the
It's
less
the
you do.
opposite.
Yeah.
Yeah, the less
Yeah.
you do, the better it is. And yeah, and that's where a lot of times you get caught up, like I said. It's and
Mm,
you want to be holding, and making money is one thing, but holding on
mm,
to your gains is another thing. And that's something
yeah.
I had to learn the hard way too, where I
Mm,
could have some great trades, but then now you're more excited. Now you're like, I need to even accelerate my growth.
mm.
And that always works counterintuitively. So yeah, you have to stick with your goals and not feel the pressure and urge to make that trade. You only make that decision when all your conditions are met versus
Yeah.
getting carried away with market.
Yeah, great. And one final thing, Ankit. So obviously, you've talked about traders being at full tilt and highly emotional, and of course, traders get in this state from time to time. What are some of your top tips for people to just, how can they manage that? How can they manage those emotions? What are some of the top tips you would give our viewers?
I mean, so the best thing I always say, first understand about yourself, your psychology. What triggers you? What's your
Mhm.
strength and weaknesses? You gotta
Mm,
you gotta be honest with yourself,
yeah.
and you just need to sort of trick yourself. Whatever can get you out of trouble in those situations.
Mm,
If you feel like you're more stubborn and you're letting your rules go away, you need to quantify your rules.
mm,
This is my weekly drawdown limit, or if I have 6 losers in a row, I need to take a 1 week break. You need to sort of quantify those things and and find out, like, okay, how can I execute those things, and yeah, just be true to yourself and following a plan. A lot of times I always use the term, like, it's like a deer caught in the headlight. When you don't have a plan, that's what it gets to.
Yeah.
You're in a position, you don't have a stop loss, you don't know how much risk you're taking, and now suddenly you're letting the market dictate what's going to happen with your account rather than you being in control. So I
Yeah.
think, for anybody, quantify your rules, quantify and understand your psychology, and work around it. Find ways to trick yourself. Like, a lot of times I remember, I would, if I had my losing streak, I'll just turn off my system and I'll just walk away. That's
Yeah.
something at work, because if I was behind my system, I will make a trade. These are the
Yeah.
things that you just do to trick yourself, or fill up your schedule, where, what, I need to kind of, divert my time something else. And, these are the things that look silly, but they are the ones that, helps you in those times, that you might need the most.
Yeah.
Don't fight
Brilliant.
the
Brilliant,
markets.
Ankit.
That's the key. Don't fight the markets. Markets
Yeah.
are not going anywhere.
No, yeah, never fight the markets. You'll be fighting a losing battle for sure. And
That's right.
Ankit, yeah, thank you very much for your insight with regards to managing risk, and
Hmm.
it must massively help your traders that you're such an experienced trader as well, and you've been through all of those pitfalls and all of the highs and all of the lows, right? You can talk
Yeah.
from experience. So, yeah, guys, like I say, guys, if you're interested in getting some funding and finding out more about Maverick Trading, please check out the links below. Please don't forget to subscribe to the channel, smash the notification button, and smash that like button. And all that's left to do is just to thank you for your time, Ankit. I really enjoyed it. Very interesting.
Likewise.
Yeah, we'll have to do it again sometime.
Oh, always. I love
Yeah,
talking, and that's the best thing. Love talking about markets, and when you're passionate about something, yeah, it's always a fun conversation.
yeah, definitely. 100%. All right. Thanks a lot, Ankit. See you later.